All right, everybody. Last month we talked about Bollinger Bands and what they mean. Remember, Bollinger Bands are volatility bands that expand out, like here. They expand out when there's a lot of volatility in the stock, and then they constrict, like right here. They constrict when there's less volatility in the stock. And how we use this is when last month we talked about to use it is you want to find that when the stock or the Bollinger Bands begin to expand. When the Bollinger Bands expand, then you could find points inside the expansion where you can make some money. So inside an expansion, you want to look for maybe a double top inside the Bollinger Band. For example, a double top would be where the first top comes outside of the band like so, right? And then the second top doesn't come outside of the band like so, and that will tell you or give you some indication that the stock is headed lower, which it did right here. But then you can use the same way as it's going down. So the stock moves outside of the band, come up, then stays inside of the band on the double bottom, and the stock moves higher and now is outside of the band again. In both instances, let me click. In both instances, you can see right here if you was to short sold the stock from 71 all the way down to $64. Okay. From here, you would have bought the stock at $63 and potentially made $94. Or it rode the stock all the way up to $94 about on this trade. Okay. So let's go to a different stock. This is a nice double bottom here. You see where the stock double bottom, even though the second one was not outside of the band or did not stay inside of the band. We prefer the stock to stay inside of the band. Right here, the stock popped outside of the band. The second top it stayed inside of the band, and then the stock moves lower. Perfect. All right. So that's what we talked about last month. Now, this month, we wanted to talk more about the squeezes and how you can make money trading those squeezes. With Bollinger Bands, when the stock squeezes, right, that means there's less volatility. And when the stock has a little volatility, eventually there will be volatility. So if you could make a trade on those stocks that have no volatility and then be in the stock when the volatility comes, you're standing a chance to make some money. So let's find a stock that has um, the squeeze. Here's a nice squeeze right here. The stock opens up, but this is not enough to let you know if you can make some money. How about here? Let's move this out the way. All right, see if we can do this. Okay, so you had the stock consolidate here all the way through this point. It consolidated. All right, and then all of a sudden it takes off and goes higher. All right, so you want to know when can you get into the stock. We could use our MACD histogram to get into the stock. You see how we had the lower low and then a higher low here? That's an indication that the selling pressure is is ending and there's more buying pressure, right? And the stock goes higher, moves outside of the band on extremely high volume, and the stock continues to go higher from there. All right, let's pick another stock. You can make a good reading. Look at this. Even though the band is expanded here, you see that there was a lot of selling pressure and then a lot less selling pressure coming up here. And the stock came outside of the band. Now it's still inside of the band. You will want to wait till it goes above resistance, and then you could probably buy the stock and make some money on Halliburton. This is nice. This is a good trade for Halliburton today. Here's another stock. What is this? Lam Research. Lam Research fell outside of the band, came up, stayed with inside of the band, and it looks like it's going to go higher. You see the squeeze here? You see the squeeze? All right. And then if you look at the MACD, you got a lot of selling pressure, a lot less selling pressure, and this stock looked like it can go higher. Now you want to wait till it breaks resistance. Okay. Once it breaks resistance, then you're off to the races to make yourself some money. All right. Look at this. Now I know we was talking about squeezes, but look how this stock comes outside of the band, right? Comes up, stays within side of the band, right? And the stock moves higher. That's a double bottom, and the stock stays inside of the band. That is what you're looking for. Okay. Let's see. Let's find another stock. We're gonna find you one more stock, and then we're gonna pause the video. Ooh, look at this. All right, though the stock drops outside of the band. Okay. You see the band gets wider, and it kind of pays here. Now it's being squeezed again. All right. You had a lot of selling pressure, and now it's going above here. Now, do you make a trade on this stock? I would suggest not, and the reason why on this stock is because you had a long uptrend on the stock. Stock gapped down, and that's usually a indication of a new trend reversal. So the stock gap down is trying to paste here. So my thoughts would be that you'll have a little tiny upside potential on the stock, and the stock will probably continue lower. So for SanDisk, you will probably want to short the stock. Now, the one thing I like to do when I'm making a trade is definitely read the news. Go back, see what's going on with the stock. You know, maybe there was maybe the stock just has a short term blip. You need to read and see what's going on. And when you're looking at stocks, you want to get behind the scenes. Go over to the company's website. Read what's going on at the company's website. Type in the name of the stock in the search. Instead of just going to finviz.com and reading the news, type the name in the search and see what comes up that way too, okay? Alright, now I want you guys to pause. I'm going to pause the screen. Okay, here you go. So you're looking at APA. Stop the pauses right here, and then tell me, what do you think? Where you think the stock is going to go? See, it makes you believe that it goes higher or lower. Okay, now that you're back, let's move the screen over so you can see your stock. Alright, so the stock, what I see, it double bottomed here, came outside of the thing, and then it came and stayed inside, and then the stock moved higher. Alright, so that's what I would have bet higher. Alright, pause the screen and tell me, what do you see now? What's going to happen now? Okay, so now that you're back, you see that that you have a nice squeeze here. All right. It looks like this is hard to tell, but there's not much selling pressure when it went below the zero line. So that tells me that it's probably still a buying opportunity at this point. Okay. So if you guys thought that, then you're probably thinking on the right path. So let's move this over. The stock did gap higher, but what happened? It had a reversal signal right here. This would have been my cue right here to get out, and the stock moves lower. All right, we're gonna pick another. Here's the stock. Give it a pause and tell me what you think. The way or the direction the stock will go. All right, so we see that the stock opened up here. It came outside of the band, moved higher. Now it's staying inside of the band without it breaking the band lower on the squeeze. All right, so we see that the stock moved lower than it came above the zero line. So that would tell me that for the short term, there's no immediate selling pressure, and I would think that the stock is going higher. So with that said, let's move and see where we are. All right, so we had our double bottom, right? And it stayed inside of the band, it squeezed, and now the stock is moving higher. However, sometimes you want to wait till it breaks your resistance point. So there's your resistance point. It breaks higher. The band looks like it's beginning to expand. All right, and you made some money. All right. Now check this out. The stock goes outside of the band, right? It comes in and moves higher, and then it not go out. Then it didn't go outside of the band. Now at this point, I would be ready to sell my stock and wait for another opportunity. All right. Okay. Let's pick another stock. Let's pick EIX. Okay. EIX. Right now, it was being squeezed here. All right. So the stock moves lower, and now it's here. Pause the screen and talk about the stock, and you tell me which direction the stock is going to go. The reason why we're going over this a few times is that by understanding what's going on with the charts, just practice, you'll begin to understand what's going on. So you see the stock comes down, touch the band, comes higher. Now it stays within the band on the second turn. The MACD doesn't really tell us much, but you have your reversal candlestick here, our doji, and let's see how well it performs for us moving forward. Okay, the stock moves higher. So you can say you could have made between $54.50 to $57, a $3 gain. So, if you had 1,000 shares, you'd have made 3 grand in a matter of, let's see, 1, 2, 3, 4, 5, 5 days or more. You get your reversal candlestick, which is our reversal hammer, which is called what? The hangman, right? It pops outside of the band, right? Comes inside. The second the second time it didn't come outside of the band. So that would be your selling point. This would be my selling point right here. Okay. All right. So we're gonna pick one more stock. All right. Let's pick this stock. This stock is FCX. Okay. The stock looks like it's in a little squeeze pattern right here. All right. So we'll go back. We see that it popped outside of the band here. right? It comes down, it comes higher, it comes down. So I see a double bottom here. Okay. Also, I see a lot of pressure, selling pressure, a lot less selling pressure here, right there. All right. So this will give me, and I see that resistance is right here. So I would think if it breaks resistance at this point at $35, I could buy the stock. All right. So let's see. And in fact, we could have made money all the way from after it broke this point of $36. Could have made money all the way up to 39, but yet you might still be holding on to the stock. So you're going to see exactly what's going to happen. It comes inside of the band, it starts to go lower. At some point, if you're holding this stock and it's not going anywhere and this is coming down, I will probably keep my profits and leave. Okay, so that was a good call on that stock. Let's pick one more stock. All right, here's the stock GY. All right, GY, we see that it was being squeezed here. Okay, it opens up, it comes down, it breaks, and just barely breaks that. But all of a sudden, you see the stock is moving a little bit higher. You see selling pressure look like it's going away, and the stock sits up. And what happened is the stock comes down, and you see like this rounding bottom here. You see that rounding bottom? Now that rounding bottom is an indication to me that the stock will probably go higher. Yeah, so it's an indication to me that the stock is going higher. And plus, you got your MACD sitting here, and your MACD is telling me that it's a lagging indicator, and it's already going above the zero line, so it's lagging price. So it's probably suggesting that it'll probably go a little bit higher so you can make some money. So say if you bought it, I would say I would wait till it break here, this little point right here. Let me draw a line there so you can see it. So if it breaks this point right here, then it's an opportunity for buying, okay, because it broke resistance. So let's see where we are. And look, we could have made money from this 15, what point is this? From 1567 all the way up to 1687, a dollar gain. So if you bought 1,000 shares of this, you'd have made yourself $1,000 in a matter of a week or two or something like that. So for some people, you earn $1,000 in a week. That's a significant amount of money, and maybe more than what you make on your paycheck. So, these little tools definitely can help you out. All right. Look at this. The stock breaks outside of the band, comes down, and the second time it doesn't break outside of the band. So at this point, would you short the stock? I would. I would short the stock here, or if I owned the stock, I would have gotten out of the stock. And look, you could have made, all right, from money, and this is short term money, so 1684, okay, all the way down, maybe to, at this point, you'd have got out, so 1530 or something like that. So you'd have got out, made yourself a dollar, okay, a dollar, 1,000 shares. That's how I look at it, okay. All right, look at this divergence here. You got this stock, the MACD is going lower, and this is going higher. Now this part right here will scare me. All right, I don't like to see a divergence. So either I will go in the direction of the MACD or I will stay away from the stock. So let's see what happens. All right, let's look at this. Let's look at this. All right, the stock opens up higher. The Bollinger Band opens up higher here. Okay, so it comes from the bottom and breaks outside of the band. Okay, it comes down and sits up on the 30-day moving average line, good support. It comes higher, and now right here looks like it's not going to break the Bollinger Bands. Plus, you see a divergence. You had a lot of buying here at this point, a lot less buying here at this point. Okay, so now that you have less buying points, you would think that the stock is going to go down. At least I would. So let's follow this out. It took a moment, but the stock did eventually go down. And here's a point, or even here is a point, or here's quite a bit of points where you could have gotten out of the stock and still made yourself some pretty good money, especially if you short sold the stock here at 1950. You wrote it out. Dang, that's a long ride out. I wouldn't wait that long now. Okay, but that's how. But it works. The goal is making sure it works. All right.